Good afternoon, everybody. I think we might just start. There's still some people joining, but I'm just conscious of people's diaries on a Friday afternoon. So just want to welcome you all most sincerely to our webinar this afternoon. Very happy to introduce my other speakers this afternoon. Amy Adams, who's a payroll manager in Grand Thornton, will take us through some worked examples on the new employment wage subsidy scheme, the EWSS. And we're joined this afternoon by Angela, Karen Byrne and Ger Hegarty. Anne is a Principal Officer with Revenue. Karen and Ger are both Assistant Principals with Revenue. We will have a Q&A, which we will have at the end, so feel free to post any questions you have throughout the session. And we will have plenty of time, hopefully, for questions at the end. In terms of the agenda for this afternoon, we're firstly going to look at, I suppose, a wrap-up really on the temporary wage subsidy scheme, and just some last minute checks and reconciliations to be aware of as we come to the end of that scheme. It obviously closed on the 31st of August, and obviously with the transition now into the EWSS. In terms of the EWSS presentation, then we're going to take you through an overview of the new scheme and the terms applying, the rates of subsidy available, registration process, and the operation of payroll. So I'm going to pass you over firstly to Karen, and she'll take us through some of the key points on the TWSS. Thank you.
That's great, Emer, thank you. And once again, thank you to Grand Thornton and the team for having us here today. Again, it's great to be able to use these platforms to speak to your many members that are dialing in. So before I begin, as Emer said, I'll give you a brief reminder of some of the operational aspects of the TWSS that will continue in the coming months throughout Q4 2020, because it is important just to keep reminding employers that had operated the TWSS that although it's closed, it's not going away for a little while. And just in terms of the enormity, I suppose, and the scale of what TWSS has meant over the last few months, I'll give you the most recent statistics that have been published on the revenue.ie website. And as of the 3rd of September, so yesterday, there were 69,500 employers had registered for TWSS, with 66,400 receiving payment in relation to 663,000 or 663,100 employees that had availed of support under TWSS, and that had paid out over 2.84 billion. To date, and that includes a tax refund amount of 151 million. So again, it just gives you a sense of the enormity of what the scheme has meant to employers over these last few months. Now, I'm just looking at my first slide there. It looks like a racetrack at the moment. It seems the content has actually not come through. So I'll just call out, oh, it's there, sorry. Somebody's ahead of the game there, thank you. So it's the 26th of March, and the transitional phase, or what we call the transitional phase, when TWSS was introduced for that initial 12-week period. And then as we moved on from that transitional phase into what we called the operational phase, and that was when revenue were actually calculating those ARNWP and subsidy amounts to be paid over to employees, and we're making that information available through a CSV file, which is basically like a spreadsheet that was made available for download to employers. Then we saw the announcement made by the Minister to extend the scheme on the 5th of June out until the 31st of August. And then as we moved on, we made various announcements around the compliance checks that would begin and would be involved around the operation, or for all employers that had operated and implemented the TWSS. And again, I'll have a little bit of information around that in the coming slides. Moving into September, October, the Q4 period 2020, we will expect to see what we're calling a reconciliation phase on the TWSS, and that is basically to bridge the gap between that transitional and operational phase. And again, I'll talk you through some of the key pieces that employers need to be mindful of coming forward in that period. And then, of course, as we have always and consistently said, there will be an end-of-year review for employees, which can involve an adjustment. If there is a liability, it can be an adjustment being made to the employee's tax credits, or a reduction to their tax credits for future year or years. And again, I'll talk to you more about that information in the coming slides. So moving on then, as I said, we'll talk a little bit about the cessation of TWSS and what it has meant and what employers should have done around that 31st of August date, and moving on if they were availing or if they were eligible to avail of the EWSS. A bit about the compliance check program that is still ongoing, the reconciliation period that we'll see in Q4, and that employee end of year review. So moving on to the cessation. So employers always had the option throughout TWSS to stop operating the scheme at any point in time, or if they found that they no longer met the eligibility criteria, or they just felt they didn't want to continue operating the TWSS. And they did that by simply stopping those J9 payroll submissions and returning all of their employees back to that normal PRSI class. So payments under the TWSS were paid to employers on a pay date basis, not on an earned basis. So on the closing of the TWSS on the 31st of August, Revenue has not accepted those J9 payroll submissions unless that was or is the normal PRSI class that's in operation for those employees. So the payroll submissions that were received up to the 31st of August were processed for subsidy under TWSS, and then any subsequent payroll submissions from the 1st of September have been processed and going forward will be processed under the new EWSS for eligible employers in relation to eligible employees for whom that subsidy is payable. So effectively that means that the pay dates around that 31st of August, 1st of September period have determined the eligibility for employers, either that being TWSS subsidy being paid or EWSS subsidy being paid. So as we have always said as well, the employer must retain all records for the operation of the TWSS, including any subsidy payments to employees or any refunds that they may have received on behalf of the employee from Revenue. And again, that will be very important to have those records as we move into the reconciliation phase. And also employers who have operated TWSS will be included in that list of employers that will be published on revenue.ie, and we have got development underway in gathering that information and moving forward into publication of those employers. So moving on to the compliance check program. So in order to ensure that the TWSS was operated correctly, Revenue started conducting this program of compliance checks on all employers who have availed of the scheme at any stage. And it's just, it involves letters that are issuing to employers or their agents where relevant, mostly or mainly through the My Inquiries inbox. And Revenue teams are working those cases in batches, and they have been making their way through kind of from the smaller to the larger employers. So if you're an employer and you haven't yet received that letter of compliance check, if you are operating TWSS, do keep an eye on that inbox for the correspondence, because there is a required turnaround time or response time within those letters. It's normally around 5 days. And even if you find that it is a very short turnaround, do make contact with your case worker just to advise them that you have received the letter and you are working towards gathering that required information. And I suppose the main the key point there is to just maintain those communications with Revenue and your case worker. The letters are just to confirm that the employer has met that eligibility criteria. So they'll be asked for information around the business activities, if there was a closure, the date of closure, and the general negative impact that has been suffered. If they were unable to pay the normal wages or outgoings, they may be asked to provide financial details to support those assertions, and also the evidence for the basis for meeting that ever famous reduction in 25% turnover test. The check will also ensure that employees have received the correct amount of subsidy and that it was recorded on the employee payslips. So again, they'll be asked for evidence to support that, possibly in a sample of copies of employee payslips. The compliance check is not part of an audit or an intervention as we would normally know it. It's merely a request for information to provide assurance that the scheme was operated as intended by the employer and within the guidance and the rules that's set out in the legislation. And in addition to the compliance check program, It will address any issues identified in respect of the operation of the real-time PAYE or PMOD, as we've come to know it, by employers over the 2019 and 2020 periods. And it's also an opportunity for employers to address any outstanding tax issues that they may have. And again, that will be important for employers who intend to avail of or who are availing of the debt warehousing scheme for the employer PAYE and VAT liabilities that were incurred during the pandemic, because up-to-date compliance is a prerequisite of that scheme. We've had a very positive response to this compliance check program to date, and most employers have responded within the required time and provided the requested information within that required time. So again, it's just important, keep checking on that My Inquiries inbox for that correspondence, or if you want to make contact with your caseworker when you receive the letter, and then you should get a notification back into the inbox when the compliance check has been completed. And now we did see some delays around this in the last couple of weeks, and again we just asked to bear with us because obviously it was around the August time, people were taking annual leave and as such. So if you haven't heard from your caseworker, do make contact with them just to follow up and see where they are with that check. So reconciliation then, so this, as I said, it's through the Q4 period, so we're looking between September and October, and it is in development and very well into the development phase and the testing phase, and we will have detailed guidance available on this, and we're looking at issuing an actual manual for reconciliation itself. But the employer's FAQ document was updated last week to version 18, and it does have some information around the reconciliation in there. So if you haven't seen it, advisable to have a look. But essentially, Revenue will reconcile each employer who operate the TWSS on all the refunds that were paid to the employer against the amount of subsidy that was paid to each employee per pay date per payslip. And you might remember, as I said earlier, from that transition phase, so back in March, even before TWSS was launched, we had the employer refund scheme, and that was around for about a week. So, and then we moved into the transition phase of TWSS, and Revenue were refunding to employers the maximum subsidy amounts, regardless of the subsidy amount that was paid to the employee. So they either got 203 under the employer refund scheme or €410 per week per employee, as I said, regardless of the amount of subsidy that was paid. So then when we moved into the operational phase on the 4th of May, as I said, Revenue was providing that information to employers around the subsidy amounts to be paid. So it gave rise to that reconciliation, or the requirement for a reconciliation, because obviously employers were getting the max amount when they should have only been getting what was refunded back or paid over to the employees. So the process for reconciliation will come in 2 stages. So stage 1 will be where employers are required to report that subsidy paid amount, or the actual subsidy paid to their employees for each pay date. And we'll be looking for that information before the end of October 2020. And again, that's the actual amount paid from employer to the employee. And then stage 2 will determine the amount of subsidy payable. Now that's the amount as specified in the rules of the scheme, or set out in that section 28 of the emergency measures in the Public Interest Act. And then if any amounts are owing back to Revenue from employers, that will form the basis of the calculation for the reconciliation. So as I said, that stage is due to commence in October. So the calculation then will look at subsidy paid, look at subsidy payable, and a possible third category called caseworker resolved. And that's where we have seen various oddities or outliers where employers have been operating the TWSS, and it may involve some manual caseworker intervention, because we can't build a system for every scenario that's going to occur in this reconciliation, so that we may require a caseworker intervention. But currently there are options for employers to report that subsidy paid amount under the TWSS and the employer refund scheme. So there's currently an option in the revenue ROS payroll reporting and the employer can report that amount by manually reporting it on the payroll notification in ROS. And as I said, that's currently available, and it's probably most useful for employers with a small number of employees. The other option then will be to enter that information, the subsidy paid information, through a CSV file, which employers would be familiar with, having operated the TWSS. Now, that is currently not available. We are working on that, and we're expecting to have that available in ROS in late September. So once the employer provides all that subsidy paid information for all the active pay slips, that will automatically trigger the reconciliation for that employer. And the amounts then will be included back, all the total amounts will be included back in what we're calling a reconciliation CSV file, and that will be available for download then by the employer, and a message will be sent to the ROS inbox, again advising that CSV file is available for download. There will also be a statement of account sent to the ROS inbox with those reconciliation totals. So as I said, there's detailed instructions in the TWSS employer FAQ document. We're on version 18 at the moment, and it's contained within section 6 on the revenue website, and that will give you further information on the reconciliation. And just as a final point to note, for employers who wish to make or have been making refunds of the temporary wage subsidy payments back to revenue, there is a RevPay facility available. We had previously advised of EFT and bank account details for that purpose, but we are asking that's no longer used. If you're making refunds of temporary wage subsidy payments back, please do use the RevPay facility. And just to ensure that the amounts only include TWSS amounts, not to include any income tax or USC in there. They should be separately paid back under the PAYE EMP subhead and correctly reflected in the employer's PAYE EMP balance. So again, just a reminder to use that RevPay facility. So moving on then, the end of year review, and again, this has become more popular in the last few days. So Revenue have consistently said that the TWSS payments are liable to income tax and USC, and the pandemic unemployment payment, or the PUP, is liable to income tax. So although they were not taxed in real time through the normal PAYE system, they are liable by way of an end of year review for the employee. So when that review is carried out, and should an income tax liability arise, it's normal revenue practice to collect any tax owing in manageable amounts for the employee, and that's normally done by reducing an individual's tax credits for future year or years in order to minimise any hardship. So in this instance, the reduction of tax credits will not begin until 2022 and may continue up until 2026, depending on the circumstances of the employee and the level of liability that they could be facing. Now, again, if an employee finds that they have affordability to repay their full liability back to revenue, they can do that, and they can do that through the RevPay facility, or they can make a partial payment and have the balance deducted from their future tax credits. So there are ways that the employee can make repayment of those liabilities, if any. And then if there are any other tax credits that the employee wishes to claim, such as those health expenses, they can use them to offset against any possible liability. So when we saw that the announcement of the continuation of, when the TWSS was announced to continue until the 31st of August. In order to minimise that liability, Revenue placed all employees that receive payments on a week one basis, or a non-cumulative week one basis. So that will continue for employees who were in receipt of TWSS or PUP placed on a week one. That will continue until the end of the year, regardless of whether they're on EWSS or that their employer is on EWSS. For employees not in receipt of TWSS, where their employer moves into EWSS and they weren't previously on a week one basis, they will be taxed as normal. And I know Emer and Amy will talk to you more now about the EWSS scheme and it being taxed in real time. So that leads into now this final slide. So important reminders from ourselves, and as I said, Emer and Amy will talk you through the main points and more detail about the EWSS. But from Revenue's point of view, it is important to keep reminding employers about those Operational aspects that will still linger on in relation to the TWSS, so the reconciliation, the end of year review. Keep an eye out on that FAQ document, the guidance document. As I said, we issued version 18 last week, so there's nothing to say that there won't be another version. We may even make it to 20 by the end of the year. And in terms of the EWSS, we have updated that guidance document recently as well. It's on version 2, and that is available on our website. And in relation to tax clearance, it's very important. That really is for employers who are intending to avail of EWSS. That is your first point, is to check the tax clearance, and that you do have it, and there are facilities available on the website to check for your tax clearance. And then if you find you're not tax clear, you can move into applying for tax clearance online, and also through that debt warehousing scheme. So it's important to have a look at that information on the website, because you'll only be granted registration through EWSS if you're tax clear. Another important note that has come up again in a couple of weeks is the agent link for EWSS. So Revenue will accept from EWSS agents an email from the employer confirming the appointment of their EWSS agent if they're obtaining the standard agent link form, if they're finding difficulty in obtaining that the standard agent link in the timeline that is available for registration. So Appendix 4 and 5 of the EWSS guidance document has additional details around how to assist in the registration for the employers and their agents. Another topic that has come up is the grants process. So to confirm the treatment of government grants and public funding for the purpose of determining that reduction in turnover, that will be dependent on the nature of the grant or funding arrangement. So with having regard to the applicable accounting standards that are in place and the required recognition treatment of grants or the public funding arrangements. So for EWSS, Revenue does regard the Restart grant as capital in nature and is therefore not included in the definition of turnover for the purpose of assessing employer eligibility for EWSS. And again, there is a piece in the guidance document regarding the European Banking Authority, or EBA, in confirming that definition for turnover for financial institutions. So it is advisable to read that material. We have had a number of queries around that in the last week or so. In terms of proprietary directors, I know we were waiting on that decision initially, so it has now been agreed that EWSS can be claimed in respect of proprietary directors, subject to the conditions that are set out in that revised material document. And that very quickly is that the employer meets the eligibility criteria for the EWSS, the proprietary director is on the payroll of the eligible employer, and the proprietary director has been paid wages which have been reported to Revenue at any stage between the 1st of July 2019 and 30th of June 2020. And again, where a person is a proprietary director of 2 or more eligible companies, a claim for EWSS can only be submitted in respect of a single company. And again, Emer will discuss all of these various topics in the coming slides. And the final point then that I'll make is just around the publication, again, to remind employers that those that implemented TWSS will be published shortly. We are working towards getting that facility in place. And again, for those operating EWSS, there will be 2 publications of those lists at the end of January 2021 and April 2021. So thank you very much for listening. I know it's kind of rehashing a lot of information, but again, we just need to keep continuing to remind employers that TWSS, although it has closed, there are aspects of it that are continuing. So I'll hand you over now. I'll hand you back to Emer, I think it is, to talk you through the EWSS process. Thanks very much.
Thanks, Karen. So, and I suppose that was a very useful overview and just a few reminders in terms of the TWSS, and particularly now as we look to transition from the TWSS into the EWSS scheme. So what we've just here is a timeline, I suppose, of dates that is useful to have as a reference point. So effectively the period July-August 2020, we were operating the TWSS and EWSS in tandem. So the TWSS continued to operate for any employees that were eligible to be included in that, and anybody who wasn't an eligible employee for the purposes of TWSS could be included in the EWSS from 1 July. Now, obviously, Karen has already referred to the Sweepback mechanism there, and we'll look at it in a little bit more detail in a few moments. The 31st of July was the date on which all new applications for TWSS closed, so no new employers were admitted to the scheme after that date. And then the 31st of August was the date on which the TWSS ceased, and Revenue was not accepting any TWSS payrolls with pay dates after this date. And I know certainly we got a number of inquiries from clients in terms of payroll runs being processed after the 1st of September. Any payroll that was to be processed after the 1st of September falls under the EWSS, not the TWSS. So 1st of September is the date on which the EWSS replaces the TWSS. And based on the current scheduled end date, it is the 31st of March 2021. So we'll just move on. So if we just do a brief overview of that scheme, sorry, slides are freezing a little bit here. So as I've mentioned, the scheme is to run from the 1st of September 2020 to the 31st of March 2021 with that sweepback mechanism for July and August 2020, which we'll look at shortly. Tandem operations I've already mentioned for July and August. So there's a separate registration process, as Karen has already mentioned. So the fact that you had a registration for TWSS does not carry over into the EWSS. So there is a new process of registration that has to be done. Again, it's done through ROS, and we will look at that shortly in another few moments. And indeed, Revenue's updated guidance notes, the version 2 of those guidance notes, have detailed in quite a bit of detail, step by step, how you go through that process. So effectively, I suppose the key difference between the EWSS and the TWSS is that this is providing a flat rate subsidy to the employer, where the TWSS subsidise the wages of employees. So as a result, what you're doing is you're paying the employees their normal contracted wages based on the numbers of hours worked, or indeed for salaried employees, the salary that they're contractually entitled to receive. Any change from that is a matter that will be outside of the revenue or tax remit, and it's more something that you should be discussing with your HR team or indeed your employment lawyers. So effectively, you pay the wages as normal and you submit a claim for EWSS to Revenue in filing that payroll return with ROS, and Revenue will in due course refund you the EWSS subsidy that is due. So in terms of PRSI, if you can recall, on the TWSS, the rate of PRSI that applied for the employer was 0.5%. As we're operating normal payroll, normal employees PRSI applies under the EWSS, and indeed normal employers PRSI will apply. However, there is a reduced rate of employers PRSI, so effectively what will happen is, in running your payroll, you'll see the normal rate of employers PRSI rising, and you will get a refund from Revenue of the difference, so that you're paying no more than 0.5% of employers PRSI in respect of each eligible employee. Again, it's administered on a self-assessment basis, and we look in a little bit more detail in terms of the tests that need to be met in terms of registration, and indeed ensuring that you remain an eligible employer for the purposes of the scheme, for the duration of the scheme to the end of March 2021. As Karen has already mentioned, there will be a list of employers who avail of the EWSS published on Revenue's website, and there's 2 publication dates envisaged, one being January 2021 and the second April 2021, which is post the current close date of the scheme. So if we just now look at what is an eligible employer for the purposes of EWSS. So as Karen has mentioned, the first important piece that you must meet is that you hold a valid and up-to-date tax clearance certificate. And as Karen has mentioned, if it's a thing that you need to get that tax clearance certificate, you should liaise straight away with your tax agent to do that. And that process is again managed through ROS. The business must be experiencing a 30% reduction in turnover or customer orders, and this must be expected over the next 6-month period. So from 1 July to 31 December 2020, you must expect a 30% reduction relative to the benchmark, and we look in a moment at what that benchmark period is. And you look at it on the basis of the period of a whole, so the full 6-month period, and not on the basis of a month-on-month. So in terms of disruption to your turnover, the disruption must have been caused as a reason of COVID-19 and not some other reason. So again, just be mindful of that in claiming the relief. So the benchmark period we're looking at when looking at the turnover for the 6-month period from 1 July to 31 December 2020, where a business existed in 2019 for the same period, you're looking at the same 6-month period for 19. Where a business commenced after the 1st of July, but between the 1st of July and the 1st of November 2019, you're looking at the date of commencement, 31st of December 19. And where a business commenced after the 1st of November 19, you're looking at projected turnover of customer orders for the period 1 July to 31 December 2020. So just a couple of other points to make in regard to employers' eligibility. So the criteria of the 30% reduction in turnover is not required if you're claiming the subsidy in respect of a registered childcare business. Also, as Karen has already mentioned, when you're looking at what turnover should be included or should be referred to in estimating the 30% drop, it includes all sources of trade income, specifically your sales, donations and any state funding, but it does exclude EWSS payments. Again, as Karen has already mentioned, in Revenue's guidance notes, they have some additional points made in terms of other funding that you may have received in terms of restart grants, etc. So in terms of the cash reserves and the inability to pay normal outputs, this, if we recall, was a key feature of the TWSS scheme. It is not a feature of the EWSS conditions. In terms of eligibility, you're not going to be asked for proof at registration, but like the TWSS, you should retain all relevant information and all relevant calculations to support that 30% reduction in trade, because this will be required from Revenue at a future period when they do their risk criteria review. And again, you should retain this documentation throughout the duration of the scheme. So just very briefly, in terms of applying for a tax clearance certificate, this, you can firstly check what your status of your tax clearance certificate is on ROS. So log in as normal, and you should see if a tax clearance cert is issued, it will state it at the top of the screen. If not, then you can apply through ROS for that tax clearance cert. And the reason that you will put down as requiring the tax clearance cert is for EWSS. So a tax clearance cert will be granted where tax affairs of an applicant and their connected parties are up to date, and where all tax returns and liabilities are up to date. An important thing to note in terms of the debt warehousing arrangement, or where you have any phased payment arrangement with Revenue, this will not be a reason for a tax clearance application to have been denied. But it's important to ensure that the phased payment arrangement or the debt warehousing arrangement has been put in place. So in terms of registering for EWSS, the registration opened on the 18th of August. The date of registration could not be backdated, so it is imperative that you register prior to the first payroll in which you're going to claim your EWSS. Now, obviously, the backdating was not required where you were looking to avail of the Sweepback mechanism. As mentioned, we'll look at that in a couple of moments. So in order to register, you're going to make a declaration via ROS that you meet the qualification criteria. You must be registered for PAYE, PRSI. You must link a bank account to the PAYE registration for this bank account is the account into which Revenue will lodge the refund of the EWSS, and you must have your tax clearance certificate or you won't be able to proceed with your registration. In terms of the self-declarations required as part of the registration process, the statement below effectively is the statement that you're agreeing to say that you have met all of the conditions to qualify for EWSS and that the business is a qualifying business. So one of the important things with the EWSS, as I mentioned, you have to meet the reduction in turnover on a cumulative basis over the 6-month period. So it's important that an employer will take a review at the end of each month, excluding July 2020, to ensure that on a 6-month basis they do believe that they are going to meet that 30% drop in turnover over the 6-month period. If you feel that you're not going to meet the 30% reduction over the 6-month period, you should deregister with effect from the first of the following month that you no longer apply. So if, for example, on the review at the end of September, an employer is of the view that on a cumulative basis to the 31st of December, they will not be down 30%. They should deregister for the scheme from the 1st of October. If it became evident in the middle of September that some event happened that was going to trigger a non-qualification, they should cease claiming the subsidy immediately. Just an important point to note that any subsidies that were paid prior to deregistration will not be required to be repaid to the Revenue. And this assumes that you've claimed in accordance with the scheme and that at the point in time that you registered for the scheme and commenced claiming the EWSS, that you did fully believe and you had valid reason for believing that your turnover would be down by that 30%. So employers then can, if subsequent events transpire that they are now going to be down 30%, haven't deregistered, they can opt back into the scheme. But again, you must ensure that you're re-registered via ROS for this. So in terms then of backdating the subsidy, the backdating of the subsidy to opt-out period cannot be facilitated. So again, just be mindful of that, that as you're claiming it, it's in real time with no backdating available. So ensure registrations have been completed. So just looking then at eligible employees of an eligible employer are those who are on the payroll in receipt of gross wages during the period. And in terms of the gross wage being paid to the individual, the subsidy will dictate what level of subsidy that they're going to get. And Amy will look at that in a couple of moments. But in essence, the basic pay must be €151.50 a week, and the maximum can be €1,462 per week. As Karen has already mentioned, there's been a slight change where now certain proprietary directors can avail of the subsidy, subject to the conditions Karen has outlined, and there is additional revenue guidance on that now available. So connected parties not on the payroll at any time between the 1st July 19 and the 30th of June 2020 cannot be included. So these will be family members. Also excluded are employees who are not part of your business. So for example, domestic employees who might be child managers, etc. And revenue are putting in place safeguards to prevent abuse of the system. So, sorry, I beg your pardon. Amy will now take you through some examples of pay slips and of calculations for the scheme. Thank you.
Thank you, Emer. So we're just going to look first of all at the subsidy that's payable. So as Emer has mentioned, there's no subsidy payable where an employee earns less than €151.50 gross per week, and there's no subsidy payable where an employee is earning more than €1,462 gross per week. So there are two different flat rate subsidy amounts, and that depends on the gross weekly wage earned by each eligible employee. So where an employee is earning between €151.50 and €202.99, the weekly flat rate subsidy payable in respect of that employee is €151.50, and for those employees earning between €203 gross per week and €1,462 gross per week, the weekly flat rate subsidy payable is €203. So gross wage in terms of the scheme includes notional pay, but it's before the deduction of any items such as your pension, your salary sacrifices like tax savers, bike to work schemes, etc. And it also excludes any payments from the Department of Employment and Social Protection mandated to the employer, such as maternity benefit or illness benefit, etc. So those are ignored when calculating the amount of the subsidy to be paid in respect of each employee. So we'll just have a look at the subsidy in respect of non-weekly pay periods. So the flat rate EWSS subsidy amount paid by revenue is based on weekly gross pay. So it's not converted to fortnightly or monthly subsidy amounts. So first of all, we need to look when paying other pay periods such as fortnightly or monthly, we need to convert it into weekly pay in order to determine how much subsidy is payable in respect of each employee. So your gross pay is typically divided by the number of insurable weeks as submitted to revenue on your payroll submission. So that determines your weekly gross pay. So we'll look first of all at a fortnightly payroll. So where you're paying your employees on a fortnightly basis, the number of insurable weeks must be greater than 0, but it must not exceed 5 on your payroll submission. So if we look at somebody on a standard fortnight where they've worked the full 2 weeks and they're getting 2 insurable weeks on their fortnightly pay, and that person has a gross wage of €850, you'll divide that 850 by the 2 weeks worked to get a weekly gross pay of €425. This falls within the bracket that leaves the weekly subsidy payable of €203. So the total amount payable to the employer in that regard is €406 for that fortnightly period. If you had somebody who had 3 insurable weeks on the fortnightly payrolls, for example, who had started a week earlier but had missed the payroll cutoff, and they had actually worked 3 weeks in that fortnightly pay period, and your employer or payroll processor includes 3 insurable weeks on that payroll, where the gross wage is €850, you'd be dividing that gross by the actual weeks worked, so 3 in this case, determining the weekly gross pay of €283.33. The weekly subsidy payable in respect of that person would be €203, but the total subsidy payable to the employer in that regard would be €609 because there were 3 weeks worked. So if we then look at monthly pay periods, this is where it just changes slightly. So on a monthly payroll, the number of insurable weeks again must be greater than 0, but they can't exceed 9 weeks. So where the number of insurable weeks is either 4 or 5, so that's typical for most monthly payrolls, revenue will multiply the gross pay by 12 and divide back by 52 to get the weekly equivalent. However, if the number of insurable weeks on that monthly submission is 1, 2, 3, 6, 7, 8 or 9, it'll be divided with the gross pay by the actual amount of insurable weeks to get the weekly equivalent. So we'll look at a couple of examples. So for example, if you had somebody who started midway through the month and perhaps had only worked 2 weeks, the number of the monthly gross would be divided by the actual amount of weeks worked to get the weekly gross pay. So for that person, if they were earning 3,451 but had only worked 2 weeks, their weekly gross pay would actually be 1,725.61. So there'd be no subsidy payable as they exceed the 1,462 per week. If somebody started 1 week into the month and had only actually worked 3 weeks in that month, and again we'll look at their gross pay being 3,451, you're going to divide that monthly gross by 3 to come back to a weekly gross of 1,150.40. There'll be a weekly subsidy payable in respect of that employee of €203, and the total subsidy payable to the employer would be 609 because that employee would have worked 3 weeks. Again, looking at somebody then with 6 insurable weeks on a monthly submission. So if somebody had started midway through September and you're processing the October payroll and had missed the September cutoff, so they had 6 weeks worked, you'd be including 6 insurable weeks, and their monthly gross would be divided by 6, coming back in this example to a weekly gross of 575. So a weekly subsidy payable of 203, and the total subsidy in that respect, because of the 6 weeks worked, would be 1218. So then if we look at the last 2 examples, these are your typical monthly paid employees. So these employees have 4 or 5 insurable weeks. Where the insurable weeks are 4 or 5, you're going to take the monthly gross, you're going to multiply by 12 and divide by 52 to come back to your weekly gross pay. So in both these examples, the weekly gross pay is the same because you're not dividing by the insurable weeks, you're doing the multiply by 12 and dividing by 52. So the weekly subsidy in respect of both of these employees is 203. And the total monthly subsidy payable is 879.67. And we've come back to this figure by taking the 203, multiplying by 52 and dividing by 12 to get the monthly figure. So in terms of the payroll operation of this scheme, your payroll processor and all employers will continue normal payroll operations. So they'll go back to the normal payroll and they'll process PAYE and USC on all taxable salary. So the EWSS amount will not be recognised on the payslip as a separate pay element, and it won't be treated as non-taxable pay like we saw previously with the TWSS. Normal PRSI rates will be reapplied to your employees and it'll be applied via your payroll calculations. So as both Karen and Emer have mentioned, there'll be no J9 class anymore under this scheme. There should be an EWSS tick box on your payroll software, and this will indicate any EWSS employees to revenue. And then the employer PRSI will be reduced to 0.5%, but this will be done via a PRSI credit. So when you're operating your payroll, the employer PRSI will be calculated at its normal rate, and the PRSI credit will be operated in the background by revenue and applied to your payroll liability. So you may receive some revenue messages after submitting your EWSS submissions. So messages will typically come through in respect of the following circumstances. So where the EWSS is ticked, but you haven't got an eligible employee, revenue will issue a message via ROS advising that the employee isn't eligible, and they will advise that no subsidy will be payable for that employee, and that such payslips also won't be eligible for the reduced rate of PRSI and will be excluded from the PRSI credit calculation. Another possible message that you might receive from revenue is that where there's no valid tax clearance certificate in place, you'll receive a real-time message to advise the tax clearance must be in place by the return filing date. So we'll have a little look at the subsidy payment timelines. So first of all, you're going to look at your month end. So your salary and your EWSS employee details must be submitted to revenue before the end of the month, regardless of what payroll frequency you're on. By the 5th of the following month, a ROS inbox statement will issue into your ROS inbox with the amount of subsidy that's due to you. You'll have between the 5th and the 14th of the following month to review that statement for any necessary amendments. On the 14th of the following month, that's when your payroll return due date, so any amendments must be made prior to that date. And as soon as practical after the 14th of that month, the subsidy will be paid back to the employers. And on the 15th of the following month, your employer PRSI credit will be posted to ROS, and that will reduce your PAYE liabilities. So your PAYE due date is the 23rd, so the reduced PAYE liability must be paid by that date. So Emer has mentioned the Sweepback in respect of July and August 2020. So there is backdating permitted for July and August where the employer or the employees weren't eligible for the TWSS, but this would exclude employees who had a tapered TWSS amount. So the Sweepback payment will be made in September 2020. Originally, it was advised that applications for the Sweepback must be made before the 5th of September. However, updated advice has come through this week to say that employers must provide information via a template, which will be available from the 15th of September on ROS. And the information you're going to need to include on the template is your employee name, the employment ID, and the PPS number. Revenue will then calculate the subsidy due and they'll remit the amount back to the employer as soon as practical after the 16th of September. And they're also going to credit the difference between the actual employer PRSI that has already been returned in respect of those employees and the reduced rate of 0.5 due under the EWSS. And that'll go against your employer PRSI liability for August 2020. So as the ladies have mentioned, there will be compliance checks in terms of the EWSS. Again, this scheme is going to be administered on a self-assessment basis. Revenue will undertake an assurance check of programme at a later stage, and the details of this will issue in due course. But it is imperative that records are maintained at the point of entry into the scheme. And at each month-end review, as Emer has mentioned, it's very important to do that month-end review to ensure that you are still eligible to continue with the scheme and that you keep your records in respect of the review that you've done at each month-end. And any trigger points, so for example, if you've had an unexpected large order that you think may push you out of the eligibility of the scheme, just to keep records of all of that information. And Revenue have indicated that there will be a high degree of monitoring for the EWSS. In addition to this, there are specific anti-avoidance provisions in terms of the scheme. So the provisions are in place to deal with any contrived situations. So for example, where any gross pay due to an employee is either deferred or suspended or increased or decreased with a view to securing the wage subsidy. So for example, where somebody would typically earn in excess of the 1462 and a pay cut is applied and the rest of the pay deferred until the end of the scheme so that you qualify for it. Or for situations where an employee is laid off, removed from the payroll and replaced with 2 or more employees in relation to the same position for whom the subsidy would be available. So where Revenue identify any cases of anti-avoidance such as the above, the employer will be treated as having never been eligible for the scheme. Any subsidy payments received would have to be refunded and there would be possible interest or penalties. So I'm just going to hand you back over to Emer now, who's just going to talk you through some of the other important points. Thank you.
Thanks, Amy. So just want to look at 1 or 2 other important points here that are relevant. Sorry, pardon.
All right.
Sharing screens. If you just want to move it down, Amy, just to populate the full screen, that'd be great, thanks. Okay, so the first thing is in terms of the accounting treatment and the tax treatment of the EWSS from the employer's perspective. So effectively from an accounting perspective, it will be treated as part of the employer's trading income. Now, as we've mentioned already, it is not regarded as part of the reduction test when you look at your 30%, whether or not your turnover is down 30%, you do not need to include it in that. So it does not form part of your turnover for that 30% reduction test. In terms of the subsidy paid per eligible employee, where they've more than it can be paid per eligible employee where they've more than 1 employment. So effectively, you would include them on your own payroll for that, presuming they meet the qualification criteria on your payroll. The 30% reduction test applies at the level of the whole entity, and it only doesn't apply at this level where you have a formal business division, and that was clearly defined prior to COVID-19. But this was an area that brought up a lot of questions under the TWSS. So effectively what Revenue are now saying, and again it's very clearly laid out in Appendix 1 of their guidance notes, that it applies initially at the entity level. If at an entity level you're not going to reduce, then you look to see, is my business constructed into formal business divisions? And if it is, and this was the position prior to COVID, on an individual business division basis, I can claim the subsidy for the impacted divisions. Where looking at customer orders or looking at turnover does not reflect accurately the reduction or the impact of COVID on your business, Revenue will consider other reasonable bases which are more applicable to your business. And where you're relying on another reasonable basis other than turnover or customer orders, Revenue have requested that you would engage directly with your local revenue district to ensure that you're meeting the qualification criteria. Because as we mentioned already, you are availing of the subsidy scheme on a self-assessment basis. And in terms of the employees, where they are engaged in the business, they must be engaged wholly or mainly for the purposes of the trade to be regarded as eligible employees. So that effectively brings us to the end of our presentation for today. So we're going to open up now to some questions. So I know there's a number of questions that have come up here. So I might just deal with them in the order that they've been posted, and we'll deal with them that way. Okay, so the first question, I start a new employee on the 1st of September. Can I put her into the EWSS scheme? The answer to that is yes, you can. Any employees, if they're meeting the qualification criteria to be an eligible employee in the period, can be included in the scheme. Another question here, should everyone availing of the TWSS expect to get a compliance letter? So I might let Karen confirm that. My understanding is yes.
Yep, sorry, I think I'm back. Yeah. Yes, all employers who implemented and operated the TWSS should receive a compliance check. The program is being rolled out to all of those employers. So as I said, if you haven't received it as of yet, we are working through them in batches or tranches. Do keep an eye on it's the My Inquiries inbox, so do keep an eye on that. You should receive the correspondence. I mean, it could be running over several weeks. It will be continuing on for a number of weeks, so just do keep an eye on that.
Thanks, Karen. Another question here, if a company has two business units, A and B, Unit A is open, B has stayed closed. As a whole, the company is down 30% in turnover, but as a business unit, A is not down 30%. Can the company qualify under the EWSS as the turnover is down 30%, or do you have to look at each business unit? So Karen, I might just let you comment on that.
I will actually defer to the expert on that. I'll hand you over to Anne.
Okay, yeah. Thanks, Anne.
Thank you. Excuse me. Yes, you initially look at the whole entity, and then it's up to yourself then to decide if you want to move on to look at each business unit separately. So in that instance, the whole entity is down 30%, I think, from the example. So it can be claimed in respect of both units. Yeah.
Yeah. Thanks, Anne. Another question here, if you've an overpayment of the TWSS subsidy, will delay in repayment affect your tax compliance for EWSS eligibility?
No, I think Annie will agree it shouldn't do, considering if there are any payments or repayments due on the TWSS, they won't come forth until the reconciliation is carried out, and that'll be around the October period. So it shouldn't affect any compliance issues. I think, Anne, would you agree with that?
Yeah, that's correct.
Right. In terms of cash flow for employers, when do revenue expect all refunds to have been repaid to revenue under the TWSS scheme? I think this is where there's been an overpayment or where you owe money back to revenue, Karen.
Yeah, so again, that'll be brought in under the reconciliation. So once that calculation happens on the reconciliation phase, they should be made back out to the employers if there are repayments due. Essentially, if the employer has been received the maximum amounts of subsidy in that transitional phase, I think the expectation is that there will be a repayment due to revenue in most cases. Now, there could be scenarios where revenue will owe an amount back to the employer, but it will be once that reconciliation calculation takes place.
Okay, so if you're a seasonal business and close in November to February, are you still able to claim for the months July under the Sweepback to October?
Yeah, I'll answer this. The test is July to December. So it's July to December 2020 versus July to December 2019. So the first thing you have to do is decide, are you actually going to be down 30% over those 6 months together? If you are, then there's no reason why you can't claim it for the months that you're open. I think you are talking about July to October.
Mm-hmm.
But as well, if you reopen in February, you'll also be able to claim it for February and March 2021.
Thanks, Anne. Another question here, which is regarding the TWSS. Can you explain the cash reserves or inability to pay normal outputs clause on TWSS?
I can take that one as well. Basically, that clause is in there just to ensure that you don't have people who have significant volumes of cash reserves. I'm talking millions now in the balance sheet. We're not talking about stuff that would be used for a normal cash flow. We did expect that people, when they did start reopening their business again, that they would end up with higher wages paid to their staff because they would be busier than what they may have been in January or February, so that the funds available would actually be used to pay the wages to bring people up above the ARNWP. And that's really the main place where the cash reserves is coming in, is that you actually use them for paying extra wages, etc., to your employees.
Great. Another question here, kind of two-parter. One, can the EWSS be claimed for someone hired pre-July 2020? And the second part is, sorry, beg your pardon, go on.
Yeah, there's no restriction on when an employee is taken on. The test is actually on the pay date, the quantum that you pay to someone on the pay date, and that's really the only employee eligibility criteria.
And I suppose on that, really what the EWSS, where it's looking to pick up people and where the Sweepback applies really, Anne, would be employees that didn't qualify for the twist because they weren't on a February payroll, if I'm not mistaken. That's
correct. Yeah, that's
from March 1st. So, and the second part of that question is, if someone who didn't qualify for TWSS and left the company in August, can EWSS be backdated for the period after July for which they were employed? Someone who's gone in August, can you claim it for July and up to the date of leaving, I suppose, is the question.
Yeah, if someone has left your employment, but if all the eligibility criteria is met and they weren't eligible for TWSS, then yes, the EWSS can be claimed in respect to them. If they're not still in your employment at the time you're claiming, that's irrelevant.
Okay, so new business start up in July 2020. Can they avail of EWSS with new employees from September? What's the basis of eligibility where 30% is not relevant?
In that instance, 30% is relevant, but you would look and see what your projections would have been if COVID hadn't, if we weren't in the middle of the COVID pandemic. So you look and see whether your projections would have been 30% higher without COVID than they are now that we are in the situation we're in, and that's your eligibility test. So there is 30% eligibility test there in respect of new businesses.
Thanks, Anne. Question here, if you have an employee who has not been working under the TWSS, but they've been getting the subsidy through payroll, what are the options for that employee? Should they claim the PUP? So I think the question is that they're not physically working and they've been kept on the subsidy, the TWSS subsidy up to now. What's the position going forward?
That's between the employer and the employee themselves as to whether the employer wants to continue making a payment to the employee. Whatever the payment they make to the employees, that will dictate the amount of the EWSS that's repaid back to the employer in respect of the payment to the employee. There's no requirement for the employee to actually be working for the employer to be able to claim EWSS in respect of them.
As long as they're on the payroll and being paid by the employer, that's the key point.
Correct, yeah.
Question here, which kind of follows on from that, I think really, if we have employees on a 3-day week and are claiming the EWSS, are the employees eligible to claim unemployment benefit for the remaining 2 days?
Yes, again, there's nothing happening because the subsidy is being paid to the employer to help them pay the amount that they're actually paying to the employee, and it doesn't impact on the social welfare that the employee may be entitled to.
And I suppose just to reiterate again, I suppose the key difference between this and the TWSS is that this is a support to the employer. So you pay the employee as normal for whatever days they're working. And as you've said, Anne, if some social welfare benefits are available to them, that's a matter for them with the DESP, not with the employer as such.
Absolutely, but of course we have the anti-avoidance thing, not to forget that as well, that you can't just replace one person with two people. Correct. So that you can maximise the subsidy, so just to be aware of that as well.
Great. And there's another question here then, if an employee hasn't changed to a week 1 and has been on the TWSS and now on the EWSS, should the contact revenue to be changed onto a week 1 basis?
I'll take that one there. I would be concerned as to why they're not on a week 1 basis. If they have been on the TWSS, it might indicate that the employer did not use the most recent RPN, maybe the payroll notification, because we did instruct, the revenue did instruct when everyone was placed on that week 1 basis that employers used that RPN. So I mean, if the situation is that the employee was not on that week one, if the employer then moves to the EWSS, they will be taxed in that real-time situation. They won't be on the non-cumulative basis. They'll continue on the cumulative basis. I'd just be concerned that it might be all employees in that employer scenario that weren't put on a week one basis. But look, if the employee themselves were not on a week one, the employer is on EWSS, they will continue on the cumulative basis to the end of the year.
That's great, thanks Karen. Claim back for July and August sheet not on revenue website as of Wednesday. I think Amy's already mentioned that it will be there from the 7th and to be completed by the 15th of September. Question again to Karen, did I hear the revenue speaker correctly when stating that the TWSS reconciliation has been finalised for 31 October 2020? What about income tax filing?
Yeah, it's not a case that it's been finalised for the 31st of October. The closing date to have the subsidy paid figures for the purpose of the reconciliation is the end of October. So the employers will have an opportunity to fill in that information on the CSV file from September right up until the end of October to get that subsidy paid information back to revenue so that we can run the calculation then on the reconciliation. And there shouldn't be any further employer engagement at that point. Once those subsidy paid figures are complete and sent back, it should just be an automatic trigger then on the system to perform that calculation and reconciliation, and then the CSV file for reconciliation will be available in the ROS inbox for the employer to download. So again, it depends on when they get that subsidy paid information returned to revenue. So it's not a case that it's aligned with the return filing dates. The close off period, I suppose, to have that information back is by the end of October.
Great, thanks Karen. What is the process for claiming EWSS retrospective for your staff who didn't qualify? So again, I think that's covered off in the Sweepback mechanism. Really, Joanne, if you have anything else you want to add to that.
No, I think it's the Sweepback mechanism, and that's set out in page 18, 19 of the guidelines, yeah. And there'll be additional information on that on the website next week.
Okay, there's two questions here in terms of the accounting treatment, really, of how you treat the EWSS subsidy. So, I mean, as we mentioned already, revenue guidelines have outlined obviously that it is taxed on the employer as part of the trading income. So effectively it will come in on the P&L. As to whether or not it's netted off against the payroll costs from revenues perspective, have you a view on that, Anne?
It depends on the accounting treatment. It's determined by the accounting standards and whatever accounting treatment is adopted by the business, in line with whatever they're doing.
Yeah, and I think from that perspective, the view seems to be that as you would treat any other grant, you normally would allocate it against whatever expense item it's supporting. So on that basis, I think that would make sense. Question here, are USC and income tax both due on amounts received by my employees under the TWSS? Yes is the answer to that, and I think that's covered off in terms of the adjustment to credits that Karen referenced. If a client has decided to warehouse their revenue debt, will that affect them getting their tax clearance cert? No, provided it's been agreed with revenue. Are both USC and income tax up to date on PUP? I'm not sure what the question is there. Can a new company who is a registered childcare facility which has only commenced trading qualify for EWSS? The staff will transfer from the previous sole trader who availed of the TWSS scheme to the company.
Yeah, there's no 30% turnover requirement for registered childcare facilities. So provided that childcare facility is registered under the relevant section of the Childcare Act, then they will qualify for it, provided they have tax clearance. That's the only other requirement for childcare activities.
Thanks. On the state funding, this includes all grant funding from the likes of Enterprise Ireland, others, that this is in terms of the turnover drop and how you assess your turnover, Anne.
Yeah, that's set out in the guidelines that you basically look and see how you would include those grants in your financial statements, and the EWSS won't interfere with that. So you just look and see. You see, every business is different and the terms of every grant is different, so we can't give a blanket everything, that all grants are included or all grants are excluded. You have to look at the terms and conditions attaching to the grant and look at the general accepted, the general accounting periods and company legislation to determine whether it's included or not in turnover.
Thanks. I'm wondering how the 30% review should be approached due to the level of uncertainty heading into the winter months, especially for a business that may have had a strong end of summer season, but have concerns about the level of demand continuing into winter. And I suppose really that's where the review on a monthly basis comes in, that if you feel you're going to be down to 30% now, looking ahead into the 6-month period, that you would register for the scheme, but at the end of each month you reassess whether or not that is applicable. So Anna, if you'd have anything else to add to that.
Yeah, just be fair and reasonable with your projections, and just have backup documentation to justify the position that you took, and have it informed by what's actually going on in the marketplace at the time that you undertake the review every month.
Great. Can we claim EWSS for holiday pay? So I think this goes back to the point that you as an employer are going to pay whatever wages are contractually due to the employee. And if their gross wage on a weekly basis comes within the parameters of the EWSS, you as an employer then claim it. So effectively you pay your employee as normal. So if they're due holiday pay, that should be paid. And if that throws them out of the EWSS, unfortunately from the employer's perspective, I don't think there's anything can be done with that. And have you anything else to add to that?
Yeah, that's correct, but it's a week by week test. So, if they're paid a holiday pay and it brings them up the threshold in 1 week, it doesn't mean that you don't qualify for the rest of the period. You look at it each pay period. Yeah,
another question is the 203 received and net rate received. Effectively, it's paid to the employer, so we're not looking at gross or net the way we were under the TWSS. You tax your employee as normal as per Amy's examples. If an employee who was getting TWSS but is not back to work, what can they do now? I think that we've already dealt with that on another question. So I'm just conscious there's a lot of questions here, and I'm just conscious of time. And to see other questions that haven't. Can amounts due to the revenue be included in the debt warehousing? I'm not sure what that question is. I mean, effectively the debt warehousing regime provides for VAT and payroll liabilities during the COVID period to be warehoused. There's also a reduced rate of interest applying to other debt with revenue where you're in a phased payment arrangement. We're actually holding another webinar next Thursday. The invites will be going out for that after this webinar today. So if you want to register for that, Grania, please feel free to do so, and we'll have a little bit more detail at that point. Does it make a difference whether part-time or full-time employee? No. Question then, if a business is down 30% in Ireland, but globally the company is not down 30%, can the scheme be used for the Irish business unit only?
Again, you're back to whether it's a separate business unit or whether you have separate budget, separate management team, separate staff. You basically have to look at the guidelines and determine whether you meet the conditions of actually having a separate business unit to justify only looking at the Irish operation rather than the global operation of the entity.
Great. Should staff currently on maternity leave be included on EWSS?
Again, it depends. If you make a wage payment to them, then you claim EWSS in respect of the wage that you paid to them, provided they're within the thresholds. And there is a section on maternity leave, or a mention of maternity benefit and other social welfare benefits that are paid to employees. And if you're making top-up payments to them, the amount of the EWSS that's paid to them is determined by the quantum of the top-up, with the maternity benefit or the illness benefit actually being excluded because it's included as part of your non-taxable benefit.
Super. My hotel was closed due to a fire in 2019. What would be the 30% reduction? What would the 30% reduction be compared against?
Again, it's your 30% reduction on turnover or orders. So there's no other reasonable basis included in the EWSS like there was in TWSS. So it is your 30% reduction just on the full 6 months.
Okay, so you're not comparing it then to 2019 as such in that scenario?
Well, the business was in operation, it just doesn't have turnover. Now, maybe they have insurance income, which could be deemed as part of their turnover. I don't know, it's a very difficult one to answer.
Yeah, it's a tricky one, yes. It's not a straightforward answer.
Yeah.
So sales comparatives for a startup, you've already mentioned, you look at your projections if there was no COVID. I'm just kind of trying to flick through to see if there's anything we haven't already dealt with. I don't, sorry. The team member only started in January 2020. Are they eligible if less than a year working in Ireland? I don't think that's relevant, is it? If they're on your payroll and they meet the qualification criteria, they should be eligible to claim it, isn't that right?
That's it, yeah.
Okay. Annual leave, what's the advice on paying this while on the EWSS? Again, as I said, anything that the employees are contractually entitled to receive should be paid to them while on the EWSS. Concessions for proprietary directors not on payroll between 1 July 2019 and 30 June 2020 due to being a startup.
It's a startup, so they're not on the, okay.
So whether
I'll have
it's
to
a
look at that
concession
and come back on that, yeah. Yeah,
Thanks, Anne.
leave that with me.
If an employer laid off one employee, can employer rehire the same employee in avail of the scheme?
So they left one person go and they took on somebody new.
Can employer rehire the same employee, it's saying?
If they're doing, like the anti-avoidance is about people who are letting one person go and replacing them with 2 or 3 people to maximize subsidy. In this instance, they're just, re-employing somebody, and there's no prohibition on that, provided it's, there's
the same person as such, yeah. If you let a member of staff go due to the downturn of work, can the employer still claim it for all other members of staff? I presume there's no issue with that.
Yeah, no issue.
On the state funding, we're claiming a grant over a period of time, so do we just take into account the amount we intend to claim for July to December?
Again, that's back to whatever your accounting rules are.
Yeah. We've 2 employees who only work on certain weeks due to the level of wedding business reduced. They were paid under the TWSS in the weeks that they didn't receive hours. Do we now have to ask them to sign up to the PUP payment with the DESP? And if so, will they have to come off this payment on the week that we have work for them? How do we manage this?
Again, that's between, the employer and the employees, so whether they're going to pay them on the weeks that they're not on.
Yeah. And I suppose it's just to reiterate that point. I know we've said it a few times, but it is, you pay them what they're contractually entitled to receive. Yeah. Can amounts due to revenue for overpayment of TWSS be included in debt warehousing? No, was my understanding on that one. New restaurant starting this week and the avail of EWSS. I think again we've mentioned startups already. Apprentices were due a RPH increase during TWSS. Can we increase their pay and pay the arrears due?
Is this for TWSS or EWSS?
EWSS, yeah.
Yeah. Again, you're looking at how much you actually pay them each, in each pay period, and that determines what the quantum of the EWSS that they get is. So it depends on, if it's all paid in one pay period, then you may end up not getting a subsidy in that period because the quantum of back pay. But you just look, like I say, it's a weekly test. You look and run the test every week to determine how much the amount of the subsidy actually is.
Great. Do interest and penalties apply to overpayments of EWSS?
Overpayments of EWSS?
I presume if it was incorrectly claimed, I presume is maybe the question. I presume there is.
There would be interest, definitely. Depends on the basis for the overclaim as to whether there would be penalties.
Yeah. Can non-taxable expenses be paid out? Again, I wouldn't see an issue with that if they're correctly vouched and all of the normal expense paperwork is in place. There should be no issue with that. Who registered for the scheme as the employer or the payroll agent on the employer's behalf? If you have a payroll agent acting on your behalf, they can register the scheme and operate as part of the operation of your payroll. I'm just trying to see if there's anything else that has come in on the chat. I think that's pretty much covers off the questions. If there are any other questions, please feel free to drop an email to us after. We will be sharing the slides, and indeed the recording will be on our website probably by Monday evening or Tuesday morning next week. So if there's anything you want to listen back to, please do. So I'd just like to thank everybody for joining us this afternoon, particularly to thank Karen and Anne and Ger for their dialing in and assisting us this afternoon. As ever, their input is invaluable, and certainly when it comes to questions, I think a lot of the questions they answer so well. And just also obviously to thank Amy Adams for her input this afternoon. So I'd just like to wish everyone a good weekend. Thank you so much. Take care.